Hey, Mike here. Well, it's fiscal cliff day, and I got out my shopping list and did some buying, added some new positions to my portfolio. You can see them below this video. Now, I've written about each one of the ADRs I bought, which are stocks. They're stocks in Italy and in Russia. I wrote about them in detail in the Power Investor service last week before I purchased them today. I put out 2 reports detailing a whole slew of stocks I was looking at as potential purchases. So, if you're a power investor, open up that report and you should be able to see anything. I'll go to the charts and talk about some of the stuff today, though, in this video. First, I bought gold in GDXJ, which is the gold stock ETF. And I've owned these before, and I actually sold them a couple weeks ago around here because I was worried that they were going to dip and break down, and they did. I wanted to lower the exposure in my account, so I dumped most of my all the gold stocks, mining stocks I had, and these 2 ETFs. But I bought them back today, and the thing about GDXJ is it fell here 5% because it paid a dividend. And I think it's on, the gold stocks are basically back down on long-term support. And I purchased them in August around here and sold them here. So I'm basically actually buying them at a lower price point than I originally purchased them for. And what I think is going to happen in the stock market is the fiscal cliff event seems to be over. And in my view, the market's likely to continue to rally. And I think we're in a position that sometime in the next couple months, the market's probably going to reach its September highs, maybe even break them, and probably stop going up from there. We'll probably get another pullback back down to where we are now, or maybe even a little lower for the U.S. stock market. Global markets, though, are in a position just to take off and continue going higher. Some of them are breaking out of, have already broken their September highs and are just going up, and up, or on a position to about to do it, such as Italy right here, Spain. Today, let's see what's Ireland doing. It's breaking out. One of my favorite stocks. I own this, but stocks like this are in a position to break out of their highs and just go crazy, in my view. So, in other words, European markets, global markets are in a position to break out and just go nuts in new bull markets, as I wrote about in my monthly forecast issue, while the U.S. stock market's in a position to merely go back up to its high of the fall and then probably peak out or be shaky from there. And what does that mean for mining stocks? Well, mining stocks, I think, are likely to trade up to their fall highs too, and then we'll have to see from there what happens. If they pause there, or pull back there, and then break out again next year, which I think is likely, then they will follow Europe and global markets and begin giant bull markets of their own. And it's the same story for gold. Gold now has resistance here. That's about the 18 level for gold of 175 for GLD. I think it's likely to trade up to that, and then in the next couple months, then we'll have to see. And interestingly enough, last year, gold dipped in December, and then right as the new year started, traded up. I think really the same thing is likely to happen, and same thing with the gold stocks. And for much the same reason, last year, a bunch of giant hedge funds that were heavily invested in gold and gold stocks had to meet investor redemptions and liquidate a lot of their positions. And the same thing is happening this year. The same funds, the Paulson funds, have done this, and that liquidation should be over today, and that overhang on these on gold and gold stocks should be lifted. So I think we're going to see a nice rally there. Now, I didn't put a whole lot of money into gold stocks and GLD today. just about a little less than 10% of my account. And I do think at some point in 2013 I will add on to that position greatly, but right now I'm content to do that, to be just invested that much. And overall, with today's purchases, I'm 81% invested and 19% in cash. And I'm happy to do that as we enter this new year, because I think at some point next year we will see the U.S. stock market pull back again. I think, again, from higher levels, just like it did last year. It peaked out in the spring. I think the same thing's likely to happen again. And I plan on taking advantage of some pullback next year when it does happen to be more than 100% invested. So I've got cash reserves I'm going to use next year, maybe even go in margin again. But I'm content now to be 81% invested. So let's talk about the other positions I bought today, because even though I think we're going to see a nice bounce in gold in mining stocks, to me, the real big opportunity in over the next 6 months is in other markets, particularly European markets, because I think they're breaking out and starting new bull markets. And when new bull markets start, big gains come. So again, we got Italy right here, just sitting there. If it breaks out, and it's on the verge of doing so, this could be up to $16. That's a huge return. And we've seen that already, like with Belgium, with Austria. So today, and here's Russia, I think can break out too. So today, what I bought were individual. I own several of the ETFs. You can click below and look at the spreadsheet of all my positions. But I already own a lot of these European ETFs, and they're like core positions for me now. I bought them at lower levels. I'm up in some of them like 40%, others 20%, 10%. I got nice gains, and I think they're going to keep going up. So today, I bought smaller positions in individual ADRs, which are stocks that trade in the United States, which are proxies for European stocks. They invest in European stocks. And I just put like a small amount of money in 5 of them. And let me show you what they are. SBRCY. And again, these trade in the United States. This is Russia's biggest bank. The market cap of this bank is as big as Goldman Sachs. So this is the Goldman Sachs of Russia, except for, and it pays a dividend. All these things pay dividends of about 2%, but it's different than Goldman Sachs in this sense. Goldman Sachs still has garbage assets, toxic assets on its balance sheets. It actually has a negative balance sheet, negative equity, whereas this bank doesn't, and it's trading at a PE of 5.7. So all these things I bought, as you'll see, have really super low valuations. They pay nice dividends. So I bought that, and I bought Rostocom, which is one of Russia's biggest telecom companies. I already own VIP, which is also a giant one too. But combined, these are the two. I basically own, Russia's two biggest telecom companies. And this stock has a P of 8 and pays a 7.26% dividend. And as RSX breaks out and goes up, I think this stock can go to 34 or something next year. Now I bought this stock, Norilsk, which pays a 3.27% dividend and has a P of 9, and it's a Russian nickel company. And it's already broken its base, and if it breaks out again, the stock can easily go to $22 in the next couple months. I also bought Lukoil, which is one of Russia's biggest oil companies, and it's already breaking its resistance here, and it pays about a 2% dividend and has a P of 5. So as you see, I'm buying super cheap stocks on a fundamental basis that are paying dividends. Now, I also bought one of Russia's giant, biggest energy companies. It's a gas company that runs through the Ukraine and supplies most of Europe with its natural gas. It pays a 5.91% dividend, has a P of 3, and a book value of less than 0.5. So it's trading like half what it's actually worth. If a company came in and just bought it out, they would end up paying like $12 a share. So I'm happy to buy that, get my 6% dividend, and I plan on holding on to it for the next year or two. And then I bought one of Spain's largest banks. It's an Italian bank. It's one of Italy's largest banks. It pays a 3.69% dividend, and it's trading at 50% of book value. So again, it's another super cheap stock, and you see it has a chart similar to the Italian ETF does. So as you see, what I did today is I bought GLD, I bought a position in gold stocks, and I bought a basket of Russian and European depository receipts, all that are cheap stocks, high dividends. Each individual position is small, but put together they represent about a little over 10% investment position for me, for the current value of my account. So, and I'm now 81% invested. As we go into the new year, I don't really anticipate taking any new positions over the short term, but with these transactions, I've now positioned myself for what I think are going to be the big trends of 2013. That's bull markets in Europe, and eventually a bull market in gold stocks and commodities that will follow Europe. And my plan is to make money in that by doing two things. One, having a position now, but also being in a position to be able to buy more later next year on a pullback in these trends. So that's why I'm not 100% invested. I've got 19% of my portfolio in cash, and I can add a little bit to it over the course of the next couple months to have some more cash. So I can buy more next year, and I've got a game plan for 2013, and read my monthly forecast issue where I talk about this in greater detail. Got charts, got more plans, more strategies. It's the most important thing I have for you for next year, really, is that monthly forecast issue, and you should have gotten it in your email. And also, as we go forward, I'll be writing more research reports, more individual stock ideas, several times a month for the Power Investor members. We're going to have mastermind sessions. It's going to be an integral part of your investing and trading for 2013, and I really think we can make this next year a great year for us because we're not getting caught up in the news, the fiscal cliff stuff. Look how many people sold out over the past week because of bad news on television, and not a whole lot has happened as a result of the stock market. And these markets in Europe and overseas didn't even drop at all. And now they're in a position to completely explode while no one is talking about it. I turned on CNBC this morning and all they talked about was fiscal cliff, fiscal cliff. It's all they talked about Friday, and they're not talking about these opportunities right in front of us to buy into stocks this cheap, to buy ETFs this cheap, to buy into markets that are in a position to just explode and go up over the next 6 months and for the next couple of years. So that's where I'm at. That's what I've done today, and I'll be talking to you as the next year goes on all the time, and we're going to have a lot of fun in 2013.